On Point with Craig's Investment Partners.
Right, good morning all. Remember, the information provided here is general in nature. It's not financial advice. It doesn't take into account your situation, objectives, goals, or risk tolerance. All investments are subject to risk and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor. And for more information on Craig's Investment Partners financial advisory services, go to our website, which is craigsip.com. Okay, another very busy week has now ended, and there's lots going on across markets. So we'll try and talk about all of it if we have time. We had a big result from Nvidia that saw that company's share price rally really strongly, pushed the tech sector up, pushed the US market up. Germany fell into recession. We had their first quarter GDP numbers and the economy contracted by 0.3%. That follows a 0.5% contraction in late last year. Consumers obviously getting hit hard by high inflation. So that was in the news. UK inflation stronger than expected. We had the April CPI, which was 1.2%. That was the monthly increase, up from 0.8, well above forecast for a decline, or at least a slowing in momentum to a set 0.7% rise. And that saw the annual inflation rate in the UK ease to 8.7, down from 10.1 a month ago, but still above forecast for 8.2. We had the Ron DeSantis announcement about him launching his long-awaited 2024 presidential campaign. He's the governor of Florida, and we've had the debt ceiling to contend with. And at the moment, recording this on Sunday afternoon. At the moment, sounds like we've got a tentative agreement in place, which is promising, but. We'll be looking for confirmation of that in the days ahead. Also, a couple of big results out in New Zealand from the NZX that were closely watched last week. We had Mainfreight. Now, this one wasn't sort of a huge surprise. Mainfreight had already provided an update for the 43 weeks through to the end of January. So it was really just those final 2 months of the year and the outlook commentary that markets were looking for some news on. And the outlook commentary was a little downbeat. You know, they're talking about tough economic conditions, reduced freight volumes that they're seeing, high inflation. You know, none of that's a big surprise because it's what we've heard from other businesses in a similar space. But it did see the share price down about 5% last week. Mainfreight shares are sort of flat on the year, but they were down 5% last week. Fantastic business, still very well managed, lots of growth and opportunities ahead of it. But as is the case with many companies, there are some headwinds that they're facing right at the moment that could stick around for a good chunk of this year. Fisher & Paykel Healthcare was the other company that reported a result, or the other heavyweight at least, and their net profit for the 2023 financial year wasn't bad, 250 million. That's only a touch lower than expected, but it was the guidance for the upcoming year where people were disappointed. Their guidance was lower than where analysts were hoping it would be, you know, to the tune of 12 or 13% below what the average analyst forecast was for the current financial year. So that's why you saw the FPH share price fall 10.5% last week. It's still up this year, still up about 6%, which is about double what the NZX 50 has done. So it's still been a good performer this year. But sounds like the markets and the analyst community got a little ahead of themselves. We've obviously got reports on both of those stocks that will give you a lot more detail, a lot more insights, as well as more guidance about whether you should buy, sell, or hold, or something in between. And that's obviously freely available on our website, or just talk to your advisor. So those are some of the highlights. But as far as market movements go, the US was up ever so slightly, 0.3%. Like I said, that was really down to the tech sector. The tech sector rose 2.4% last week, and that was actually the only sector to rise. All other 10 sectors, there's 11 main sectors of the market, 10 of them were down. Tech was the only one that was up. So that in a big way came down to Nvidia. Nvidia, obviously a chip maker. Its share price rallied almost 25% on the back of a very upbeat outlook commentary, which is linked to what you're seeing in the AI space. Obviously, there's going to be a lot of advances in terms of chips to sort of run all this AI. And chips might become a bit more obsolete more quickly. So Nvidia is expecting that it will need to produce and supply a lot more chips. So very strong performance there. Most other markets were down a little bit. The UK off 1.7, Europe off 1.6, Aussie off 1.7. New Zealand had a tough week. Our NZX50 was down 2.2%. But like I said, that was largely a result of Fisher & Paykel Healthcare, which is the biggest stock in the index in terms of its index weighting. So where FPH goes, the market often follows, and last week it went down. So the market probably would have been down a little bit anyway, but not as dramatic as that. Interest rates saw some interesting moves there. In the US, interest rates were up quite sharply. I think that came on the back of some stronger economic data that came through on Friday. The US consumer in good shape, and some stronger inflation figures. PCE inflation came in stronger than expected. So we'll talk about that in a minute. But what that meant was financial markets, who not so long ago thought that the Federal Reserve had finished its rate hike cycle, they've now started to second guess whether that's the case because of that stronger inflation. Got a few people out there saying, well, hang on, maybe the economy is stronger, maybe inflation is more persistent, maybe they will have to move again. So you've seen interest rates rise on the back of those expectations that we could see one more increase in the Fed funds rate later in the year. Time will tell. In contrast, here in New Zealand, local interest rates fell because we obviously had the Reserve Bank announcement. They increased the OCR, but only by 0.25%. Some people had expected 0.5%. And just as importantly, they stuck with an unchanged OCR path in their projections. And that path, just like it was in February, indicates that 5.5%, which is where they're now at, is the peak for the OCR. Now, most people were expecting that to be upgraded to something higher. So that was a bit more of a cautious commentary, a more dovish commentary than people were expecting from the Reserve Bank, and that saw interest rates fall and bond prices perform well. It also saw the Kiwi dollar decline. So the Kiwi dollar was actually off quite a bit last week, and that's good if you're an exporter, obviously, but it's also good if you're a New Zealand investor who's got some Aussie shares, some US shares, international shares. I'm assuming that you sort of don't sort of hedge them. Most private investors don't sort of hedge their international holdings. It's very hard to do so anyway for many private investors. So the good news there would be that because the currency fell 3.7% against the US dollar, almost 3% against the pound and the euro, and 1.7% against the Aussie dollar, that boosted returns from holdings in all of those markets. So it actually wasn't a bad week for New Zealand investors once you sort of account for those currency moves. Key releases over the week. We'll start internationally. We did get the flash PMIs, which are activity indicators for May. They were solid. Long story short, all of the major economies are still in expansionary territory. All of the PMIs, and this is for the US, Japan, the UK, Australia. All of those regions, the PMIs point to continued economic growth. However, some of them did come off the boil a little bit. So the US and Japan probably the strongest. The US PMI increased to the highest since April 2022. And in Japan, the composite PMI rose to the highest level since 2013, so the highest in a decade. We've talked about Japan going pretty well this year, and I did record that video that I think I've mentioned with that Japanese fund manager that's worth a listen. It's still sitting there on the website if you want to follow that up and find out exactly what's going on in Japan. But the economy seems to have found a bit of growth and momentum, and the share market has, and nothing's slowing down so far. It's still ticking over nicely. The PMIs for Europe, Australia, and the UK were still solid, but economic momentum slowing a little bit. So overall, picture's still good. However, still a bit of a divergence between manufacturing and services, and inflation indicators also a bit mixed. You're still seeing some inflationary pressures in places. And talking of inflation, and this was why we saw US interest rates rise, why we've got people talking about potentially another Fed rate hike in the months ahead. The personal consumption expenditures index for April was stronger than expected, and it pointed to more persistent inflation pressures. So at the headline level, the monthly increase was 0.4%, and that was actually the same at the core level as well, and that was above forecasts for a 0.3% increase for both. So the annual change in the headline PCE rose 4.4%. That's up from March, where it was 4.2%, and the annual change in the core PCE increased from 4.6 to 4.7. So it's still better than we were at for the bulk of last year, but it's just a reminder that it's not going to be easy to get inflation back down to the levels that we want. Here in New Zealand, it was the RBNZ. This came out last Wednesday. And they increased the OCR by 0.25%. So now it's at 5.5, the highest since 2008. That's the 12th increase in the cycle. Started in October 2021, and quite possibly they've finished in May 2023, because based on the projections in the accompanying monetary policy statement, that was it. They will now pause. So that's interesting. In those projections, they still show the economy falling into recession, although they've got a bit less downbeat again. They've now got just 2 quarters of negative growth, and it's still a very, very mild recession. They've got unemployment rising to 5.4% next year, which is a bit more subdued than what they expected in February. They had it unemployment rising to 5.7, and they've also revised down their inflation projections. So they've got inflation falling to 4.9% by the end of this year, and 2.5% by the end of next year. So it's quite possible they're done. The next decisions we get from the Reserve Bank will come in July, August, and October. At the moment, financial markets see about a 50-50 chance of another hike, and about a 50-50 chance of that being it. So we'll just have to wait and see. We'll have to see how the data develops and how the economic indicators develop. What I thought was interesting, and this maybe sort of tells you something, in the lead up to last week's meeting, markets and economists were divided between picking a 0.25 or a 0.5% rate hike. But what actually happened was the Reserve Bank debated a 0.25% rate hike or no hike. They didn't even discuss a 0.5% increase, a 50 basis point increase. So in the end, they voted on it. 5 members went for 25, 2 voted for no change, and 5-2, they decided they'd go for the 25. But they're definitely not as aggressive as the market expected them to be. And I think where we might have all got things wrong is we're very focused on the budget, which was expansionary. Maybe they expected that. I think the other thing we've probably forgotten about is the fact that inflation is still coming lower than the RBNZ was expecting back in February. So inflation has been slow. I think we probably got a bit too hung up on the budget and what that would mean. The Reserve Bank is obviously also conscious of the lagged effect of monetary policy changes, which are obviously even greater when interest rates are moving as sharply as they have in recent times. Remember, fixed mortgage rates sitting around 6.5% for 1 year, 2 year terms, but At the end of March, we haven't got the more recent data, but at the end of March, the average rate that fixed borrowers were paying was still just 4.5. So there's still a bit to work through the system. So maybe those are some of the things that the Reserve Bank was pondering and thinking about. Looking ahead, there's plenty to keep an eye on. It will be a holiday shortened week in the US and the UK. Both those markets are closed on Monday. So, Monday evening, the US be closed. It's Memorial Day, and the UK market will also be closed. So a holiday shortened week, which means there'll be a little bit less happening out there. The debt ceiling, like I said, that'll be front of mind. We had some updated guidance from the Treasury, the US Treasury, which suggested the country, the earliest it could run out of cash would be the 5th of June, which is a week today, next Monday. That's slightly later than what we heard from Treasury Secretary Janet Yellen, former Fed chair. Janet Yellen, recently, she'd previously said the 1st of June, which I think is Wednesday or Thursday. But anyway, we've had news over the weekend of a tentative agreement. It sounds very promising, but we've seen things stumble before. They've still got to get it through Congress, and there could still be a couple of hurdles to meet. So that's good news. I think markets would be heartened by being able to put the debt ceiling stuff behind them. It'd probably be a positive driver, which would add to some of the optimism across markets that we've seen of late. But we'll probably remain a little bit cautious until we see something more concrete. On the economic front, we'll be watching the US. We've got the ISM Manufacturing Index as well as the monthly jobs report coming out this week. So the ISM Manufacturing Index, both of these will be for May. ISM Index due Thursday, jobs report due Friday. The ISM Manufacturing Index has been in contraction for 6 consecutive months. So for 6 months in a row, it's been under 50. 50 is the sort of break-even level that separates expansion from contraction. And it's expected to be sort of more of the same. It sort of ties in with what I said earlier about those PMIs, which are a similar type of indicator, but run by a different company. The ISM index is one of the ones that's very widely followed and very credible. But the same thing applies. The ISM manufacturing has looked pretty terrible, and the ISM services index has looked very strong. The services index will be out early next week, so we'll get that next week. But this week will be the manufacturing sector that is in focus. And in terms of the jobs report, that'll be out on Friday. I think the market is looking for 190,000 new jobs to have been added in May. That'll be down a little bit from 253 in April, but still solid. And the unemployment rate, which recently fell to 3.4%, which is a 54-year low, is expected to rise slightly to 3.5%. So those will be a couple of things that we're watching out of the US. In Europe, we've got some inflation figures. They are due out on Thursday, so we'll be watching that, particularly in light of the UK inflation last week that was stronger than expected, and some PMIs out of China. I mentioned those PMIs from other regions. The Chinese ones come a week later, so these will cover the month of May. But we will get the official PMIs on Wednesday at 1:30, and then a private sector survey for the manufacturing sector, at least, will follow the following day, Thursday at 1:45. So Chinese economic data started the year with a hiss and a roar, but it's really slowed down over the last month or two. And, you'd almost argue that, the rebound overall through these first 4 or 5 months of the year has been a little bit disappointing, given what we would have all expected with the Chinese economy having been closed for the vast bulk of 2022. Closer to home, across the Tasman, we've got the monthly inflation indicator for April. That'll probably be the key release in Australia. That's out on Wednesday. And here in New Zealand, we've got the ANZ Business Survey for May, which is due at 1:00 on Wednesday. And that's really the only major release, but wouldn't be okay to have a quieter week because we've had a lot of activity across the local market with the budget a fortnight ago, and then last week we had the Reserve Bank. So plenty been going on. So a slightly quieter week probably wouldn't be a bad thing. But the ANZ Business Outlook survey will be interesting. It's been stable lately, but it's still tracking at very low levels compared to history. We'll be watching for how businesses are feeling. We'll be watching the inflationary indicators as we sort of try and take the pulse of the business community. I think I've said before, in an election year, you would expect businesses to be a bit cautious, a bit downbeat. They won't really want to make any major decisions there. They will be inclined to just be a little bit more standoffish as we head toward October. And people just don't know where they stand. They don't know if the goalposts are going to be moved. So regardless of who gets in, I think you often do see a bit of a resurgence in activity and decision making, post an election, because at least then people know they know what they're dealing with. So that's something that I'm expecting will weigh on business confidence for the bulk of this year. And that's probably us. Not a whole lot on the corporate front. There are a couple of local releases, mainly sort of smaller companies. Arvida, probably the most interesting one, that's out tomorrow. Internationally, Salesforce and Lululemon, probably the two companies that are worth watching. Their earnings releases are out on Wednesday and Thursday, respectively. But that's pretty much us. So enjoy your week, all. As always, if there's something in there that has sparked your interest that you want to know more about, then touch base. We've got plenty of research, financial research, sustainability research on all the companies that I mention, and plenty more in terms of portfolio strategy and other bits and pieces. So if anything in there has hit a nerve and you feel like you want to know more about it, then just touch base with one of our advisors, and we'll be more than happy to provide you with further information. All right, thanks all.
For more insights, visit craigsip.com.